if only you have $300,000 with me, I will give you these products. 1.5 million with me, then I will give you these products. 5 million with me, then I will give you these products. They had all of the products on the shelf. They created artificial layers. In financial services, rarely things are invented. How many banks you know have patents? I don't remember a bank suing another bank for a patent. Imagine any other market having government nudge to promote a payment method. You literally had advertisements on buses.
What are the kind of primary challenges that you think are facing fintechs in Singapore? Is that not really good for the end customer? Why do you do it? Why does it matter to you personally?
If we could give that level of economic superpower to our people, it would be life-changing. You wanted a challenging one, right?
Hello and welcome to this new episode of Money Travels, presented by Visa. We're here to explore the fascinating innovation in the digital finance for anyone, or everyone, I should say, everywhere. I'm Max.
And I'm Rich. And this week we're in Singapore, and today we're joined by Varun Mittal. Varun, thank you for coming on the show. So before we get into everything you've done, I think the two words that kind of spring to mind from the four books you've now written are the terms Singanomics and then garden economics. I'm not going to try and explain them from what I've read, so I'd like you to kind of talk to the listeners about what they mean.
So Singanomics is a unique Singaporean way of doing economic development where the public side and the private side comes together. The public side decides that certain things needs to be built by the national government, while private market can focus on competing on things which they will be better at, but while having enough safeguards to ensure that this is not a mad competition rush. It's a sustainable development. Singapore was one of the later countries to issue digital banking licenses compared to the Western peers. And the reason being, in West, the excuse was always to increase competition, to increase choice. The Singaporean version was to meet the unmet and unserved needs of people. They're supposed to solve problems. So that's which is very unique, ingrained in Singapore flavor across the board, not just financial services, but that is what we coined that term, we trademarked it. And this is something which is everlasting. Unlike a Bidenomics or Abenomics, which moves when the leader moves, this will live on.
And garden economics.
Singapore historically was created as to have enough green areas because it has a country with very limited natural resources. So there's a lot of focus on greenery. And the one thing with garden is that you focus on what you want to do in which part of the garden and you put resources behind it. And that's something which applies to the overall economic model of Singapore. Every few years, the government will decide this is the national priority. Sometimes it's biotech, sometimes it's CBDC, sometimes it's quantum. And then everybody comes together to solve a problem, to create world-class solutions. So that obsession to focus on certain problems in the short terms of time, that's something which is very unique.
I was going to say, it's a very unique involvement from both the government and the regulator in the country's, the way the country's run from an economic point of view.
Absolutely. And that comes from the fact that this country is not very old. This is the 60th year of the country only. They were structured in a point where they had to create a unique model of development which suits their own needs, where they're a knowledge-based economy devoid of much natural resources.
There's one thing having a philosophy, but how does that relate to how you've seen the impact on kind of the end customer? Because that's ultimately what it's all about in terms of kind of unlocking new opportunities in the market.
So for the end customer, for example, let's say Pay Now. So when the regulator believed that, okay, we need to have an easier way for people to be able to send money to each other, people to be able to send money to a shopkeeper from that perspective, there was a massive push and awareness. You literally had advertisements on buses telling people how Pay Now works. Imagine any other market in Western Europe having government nudge to promote a payment method. All the political people would talk about why this is needed, why they should register. The banks went out of the way to register everybody. Another example, 7-8 years ago, the government felt that corporates would want to do innovation labs, but they need some support to set it up and everything. They gave grants for corporates to set up innovation labs. So at one point of time, Singapore had world's highest innovation lab per capita. We had more than 60 corporates with innovation labs in Singapore. For a country with 5-6 million people, that's phenomenal. If that was the focus, and when those experiments are happening, these experiments are the one who ultimately end up reaching the consumers.
So what's the focus for this year?
Three main focuses. One is AI and how that impacts the future of workplace. The second one is a lot around quantum computing, because it's uncertain what does it mean for cybersecurity. There are people who are saying all locks will be broken. So those are some of the focus areas.
We haven't probably got long enough on this podcast to go through everything that you've done in your career. So I kind of want to focus on where you are now, and especially the work you're doing with Fintech Nation, the company you founded 5 years ago. Firstly, let's cover off what you do there. But I think what's really interesting for the listeners is doing that in terms of what are the kind of primary challenges that you think are facing fintechs in Singapore and maybe in Southeast Asia as well, and how do you relate the work you're doing at Fintech Nation to that?
So Fintech Nation technically is a movement technically for us, and when we look at what are the key challenges, I would say one big challenge is capital markets liquidity. You do not see a lot of startups, not just fintechs, being able to list on IPOs in Southeast Asia. So either you are large enough to be able to go all the way to the US. The previous generation of IPOs in some markets like Indonesia had their share of challenges. Even the ones who went to the US had their share of challenges. So now the challenge becomes is what's next? So if you hit like 600, 700, 800 million valuation, either somebody comes from outside to buy you, because there are not enough local buyers to put that much cash outlay to buy you, or you list. Are the capital markets ready? So the capital markets maturity needs to work. The other part I would say, for Singapore, is becoming from how do you balance what staff to keep here versus what goes to AI versus what goes to overseas, because that's a very critical resource allocation prioritization challenge for early stage startups. So that is, I would say, is the other challenge. Rest of it, how much time it takes you to get a license, how much time it takes to acquire customer, those are forever challenges everywhere.
I mean, if we focus specifically on the way money moves, where are the challenges today, and maybe also to be a little bit more optimistic, where the opportunities are for fintechs, but also for banks. And we love to talk about this relationship between the banks and the fintechs in this podcast, because it's an ever evolving environment, but also with different dynamics across the world. So we'd love to hear your perspective on these dynamics.
All markets in ASEAN have a different relationship. Some of the markets, like say Philippines, they would allow fintechs to have direct switch access. Or Thailand, for example, would be much more transparent and open in terms of how do fintechs get access to a switch, national real-time payment switch. Versus some of the other markets would not have access, that you must go through bank. And there will be some in Singapore which will be somewhere in the middle. So some fintechs have access, but it's not a black and white. The bank's view is that we have built that infrastructure, we have built this. Of course, all the parts on security, governance, compliance, assuming that's all met, the part becomes is what's the fair cost of access. In some markets, the regulators would come and define the fair cost of access. In some of the Western markets, the regulators would literally announce that this is the number. In some markets, they will let the private markets figure those things out. So what is happening is a lot of fintechs are then focused on building custom workflows. They're taking one industry and going very deep on solving those. So one company I was sitting down with, they're building construction specific, because construction has 6 levels of payment flows. Because nobody owns everything. Everybody is hiring a vendor to do the next thing. Mm-hmm. And they're releasing payments in that transaction. So they need a 6-level escrow, which crosses multi-markets. And they're like, forget trying to explain this to a bank. Because this is SHIP. and you're doing something, or shipyard or something, and you're doing this. In Singapore, you're importing half the material. Your construction material can't be built in Singapore. There's no way you are having a mind to bring marbles out. 6 levels escrow, cross-border included.
What's the impact then on the end customer? Because surely, take the construction, for example, construction industry. Is that not good for that industry, having someone like deeply focused, back to, I guess, the garden economics mentality? So whilst it's, I guess, limiting from an expansion from maybe the fintech's point of view, is that not really good for the end customer?
No, it's good for fintechs also. Because you see, because there are only 20, 30 anchor customers. Once they know that customer 1 and 2 have done it, the other guys will pick it up. And suddenly now the lending companies love it. Because if it's 6 level of escrow, the lending company wants to lend on the back of that escrow. So 5 lending companies, including banks, are queuing up to that company that can I lend on the back of it. Next would be, if it reaches a certain scale, the people would come, can I securitize your receivables and payables? So it is great for everybody, but which is where what I'm saying is fintechs needs to focus on specific areas. They need to pick up a niche. If they say that, okay, Singapore is not a market where you'll say, okay, I'll launch a wallet and this wallet will compete with all the banks and their installed base. That is something I'm not sure. There's some niche use. So if you say, I will do a travel card only, which will focus on travel and shopping, perks and privileges, and reducing the cross-border markup rate only. Yes, then it works. But if you say, I will do multi-market, multi-use cases, and as a fintech, I will launch 5 categories of cards like a bank, then your resources will start to dwindle.
It's a business choice, right? It's how do we make sure, to quote a famous book, that those fintechs can cross the chasm. And so I feel like, from what you're saying, going after a specific niche and win and learn to win there. But how do they, from your perspective, how do they engage with the wider ecosystem? Because, back to your point on construction workers, etc., you have multiple needs to serve, and they probably can't serve all these needs and reconcile these 6 different layers. So what's the partnership here? What's the ecosystem here?
So which is what Fintech Nation would do. So when this founder reached out to share, says, okay, what do you want? We'll give you players who can move the cross-border for you. Let's figure out which are your corridors based on that. If you need somebody who is a licensed escrow player just for the escrow part of this, then here are the other 3 fintechs who can solve. For the lending side, you're already engaged with 3 banks. Here are the non-banks, 3 or 4 non-banks we can bring for you. So this is what we would do as a ecosystem builder, that if a founder needs help, we know at the back of a phone call. So there's this weird thing in Singapore where most of the key founders are in one WhatsApp group where the regulator is also in that WhatsApp group. It's like the clubhouse of Singapore, invite-only club.
Like it.
It's called Fintech Chopal. So you have a problem, you have a wish list, you want something, you go post there, and you'll have 200 plus founders in one group, Singapore-based. Somebody will solve it for you.
There's a similar kind of application in the US actually that's on I think it's on a Slack channel. So
we are cheap. We don't want to.
Exactly.
We don't want to pay that much. WhatsApp is free.
So just going back to that. So how long do you think before you'll see, and maybe you're seeing it now, a bunch of kind of mergers and acquisitions in this segment? Because if you have a company who goes deep on solving a specific thing for a construction firm, is that happening now?
Happening already. I'll give you an example. So Squad was a Singapore-based company. They started as the payroll employer of record business, and they built a decent business, and they were acquired by Payoneer. Because when you're doing employer on record, you're doing it for other markets when you're holding employees. Payoneer acquired them because they wanted to control all the payment flows. There was another company called Fritz, which was acquired by Deal, because Deal wanted to come to this part of the world, and they wanted some asset team and everything. So there are those tactical acquisitions. So the way we look at it is there are 2 types of acquisitions. One is a regulatory acquisition, and one is a vertical acquisition. So a lot of companies from outside markets want to buy a company for their license. Yeah. And they say, we know how to bring the product, tech, infra, just I want the license. The others, they have a P&L, they want to acquire them, and they want to add that as a product on their shelf. So now Payoneer, for example, will add employer of record as a functionality on the global Payoneer shelf. And Squad did not have a license. So there are two different plays on those M&As.
What are the types of customers, and in particular, the problems that those companies are solving that you guys are looking for at the moment?
See, broadly, people are looking for solutions where you have a right to win because you are agile and you are hungry. If you say that you will invent a new technology, that's not very likely. Your likelihood of winning is you have a team which is hungry and can move fast, because then you can solve a problem faster, and the incumbents either is too small or it's not a priority, and you can build off a niche for yourself. So that is, I would say, in financial services, rarely things are invented. How many banks have patents which they have managed to sue somebody else for another bank? I don't remember a bank suing another bank for a patent.
It's less revolution. It's more kind of evolution of services coming together. It's actually the delivery that is the innovation, and it's how you stick these things together.
Yeah, absolutely. And when we prepared this episode, you talked about, I love the term, so I want to reuse it here, but you talked about the Spotify moment. And I would love to expand on that, because it's completely related to what we just discussed about, this race for a bigger reach, but and access, I think you talked about, right?
So I'll give a very simple example, right? Historically, all private banks would say, if only you have $300,000 with me, I will give you these products. Only if you have 1.5 million with me, then I will give you these products. When you have 5 million with me, then I will give you these products. They had all of the products on the shelf. They created artificial layers, because these were all done in the previous era, where you needed a physical setup for everything. You needed a branch where the waiting time is 1 minute for the 5 million guy and 15 minutes for the 1 million guy and 1 hour for this. It wasn't that. But what's happening in the current era? The fintechs, as I said, Spotify moment. You can be Taylor Swift or Varun Mittal. The song catalog is same for you. And based on whatever I listen, my recommendations will change and evolve. Similarly for somebody else. And the price is also fixed. Price is also very transparent and fixed. Even if there are some premium tracks or something, everybody knows what that price is. So there is no walls. Now, when that model comes, the Spotify model, the Netflix model comes in financial services, this is the product shelf. Subject to a regulatory approval that you are regulatory allowed to access this, you can. There is not like this minimum for you to access. Because fintechs are coming from a perspective, I don't have a branch and I don't have a lounge at the airport. From that perspective, it doesn't matter. So that changes the game, specifically wealth management. It starts to impact payments. It comes to insurance also, but it hits wealth and payments first.
We're talking about a leveling the playing field, but that increase in reach, does that come at the expense of quality or reliability?
See, the premise is, if it's a self-service business, then it doesn't. When it's a human-delivered service, then you would need to put tiers. But when it's technology, the technology cost of service and reliability and delivery is not different.
There is a word that you use multiple times since the beginning of the conversation, which is more around, a couple of words: compliance and regulation. Mm-hmm. How well is it? Is the industry today supported in Singapore? And where do you see that big topic going?
What we have been fortunate is that regulators have understood that, okay, in some areas we need to figure things out. So when we started, Project Ubin for CBDCs, most compliance people would be figuring it out. But if the regulator comes in and says, we acknowledge that this is a ring-fenced experiment, let's work it out. When they started using the word purpose-bound money, I'm not sure how many financial institution compliance people would be like, okay, it is not in the Financial Services Act. The purpose-bound money does not exist in any act. It does not exist in any of the dictionaries they have, because it was a new word. From that, but the regulator said, okay, we are doing limited POCs. We would like to have volunteers from the banking industry and the fintech industry to do a limited pilot in next 6 months. Then when the limited pilot experiments methodology comes, then people are like, okay, we can try, and we will have the right safeguards built in before we go out full scale. But this is an area where we can learn and figure out. So that's something which is very interesting for Singapore to thrive.
One of the other things that we're trying to do with this podcast is not just talk about the products and services that are out there, but it's to talk about the people behind that. And we've talked a little bit about your time at Fintech Nation. Why do you do it? Why does it matter to you personally? Kind of maybe a bit about your background, where you come from, how you fell into this world.
See, I came to Singapore 16 years ago as a computer science engineer. Did my MBA, started doing payment sales. At that point, it was just payments industry. The word fintech did not exist. I ended up with a bunch of crew which set up a payments company, which later evolved as fintech company called HelloPay. It was a clone of PayPal, to the level that the registered name of company in few markets was PayBuddy, to that level of clone. And Rocket Internet was one of the backers, so that can tell the background. And that point, what was happening was fintechs were starting to do something, payments were starting to do something, but banks had their own representation as Association of Banks in Singapore. Insurers had their own, wealth managers had their own, and MAS was setting up FTIG, Financial Technology Innovation Group, like a fintech arm in MAS. And we would talk to them and they were like, who do you represent? Who do we talk to? These are like 25 people. Who do we talk? So that motivated me that, okay, if all startup people need to solve our problems, we need to create our own association. So regulators was very kind to help us, and we created Singapore Fintech Association, which was recognized by government as official representative of fintechs. We managed to exit our startup, but I became investor in several of the other startups at that time, which are now the likes of Aspire and stuff, which were all my peers at that time. And it became that thing that you were the custodian technically. So I founded the association. I had the WhatsApp group at that time. I convinced regulators to join the group. It was a big coup that regulator get feedback from founders on a WhatsApp channel. We set up that, and then became like a passion, because today, whatever I have, I got from that community. And this is the time when COVID happened, and somebody needed to stitch the community together. So we were doing these things. Investment was always continuing and stuff. But the moment COVID finished, our challenge was people were cut off from each other. Nobody had met. People left the country. So we invented something called Fintech 65. So 65 is the year of independence and the country code. And every year we recognize 65 people across different categories who are not known and not famous. And we create the next generation leadership of the thing. And again, the regulators, the whole ecosystem comes to support Fintech 65 every year. We've done it for 3 years in a row. And now we actually have a physical book which comes out with the profiles of these people and stuff. You have Humans of New York. So we created a version called Superhumans of Fintech, where 20 founders gave their story of how somebody helped them in their journey. And we created a coffee table book last year. So for me, it was like, I just spend time with these people. These are my people. I haven't planned things. I'm just trying to do stuff what is right for them, and they just follow.
How many WhatsApp groups have you got on this?
I have one for VCs, one for FinTech General. I have one for insurance. These are the 3 in Singapore. I helped some of our people move to UK, so I helped them clone the version for UK. And one for India, because some of the people from India are very closely connected, who were part of the Singapore, so they wanted help to clone it. So there's a proper charter, governance, rules and regulations. So 3 in Singapore, and 1 UK, 1 Indian offshoots.
Wow. Having a regulator as part of a WhatsApp group, or even just having a regulator who is that close to helping, supporting the economy is fantastic for you and your position and the companies that you're working with.
And the thing is, see, I'm not the gatekeeper. Everybody knows the phone number of the chief fintech officer because he's added to that WhatsApp group. I'm the gatekeeper of, you cannot push birthday messages and random forwards in the group. I'm the gatekeeper for that. I'll whack you for that. But you know who's the chief fintech officer. You can ping him directly. I have no problem. That's fine. And I'm grateful that MAS trusts us that much. They have that much trust and faith that we're doing it for the community. We have our share of debates where we have certain views and they have certain views. Sometimes we will understand their view, sometimes they will understand our view. Sometimes we'll both agree that in some time we will rediscuss and find a way to agree or disagree from that perspective.
The agreement or the disagreement you may have is one-on-one, a person to a person, rather than opposing like two institutions or two businesses, which sometimes make it like even bigger and more complicated.
It's not even a person versus person. It's a topic based. So you and I can agree on 3 topics and disagree on 2 others. So it goes even lower. It's not even at a person level. It's on a topic level.
Yeah.
It's at the granular topic level, and people acknowledge, and which is why we create that safe space for people to debate. Sometimes digital, sometimes non-digital. Our model is not to fight on Twitter. That's not how our society is. We have a certain different ways of having our engagements, our discussions. We do it our own way. And sometimes it means writing up a paper to ensure that the regulator fully captures your views and feedback. So we're writing 2 papers right now because we have certain views on certain topics. We discussed with them. They said, you submit the half version to us, like semi-ready version. We'll give feedback. Then we work it out.
The theme of this podcast is money travels. And what part of the wider Southeast Asian region do you think is kind of next and investing kind of most effectively to meet kind of customer expectations? I know the kind of Maz and their relationship with you guys is probably unique, but have you seen this as you've traveled across other regions as well?
What regulators have been trying to do is to build a real-time payment switch connectivity. So Singapore, Thailand already have a real-time payment switch connectivity. I can send from my pay now to your prompt pay even now. Right. And reverse. So ideal position for them is to reach where they can create an ASEAN hub switch, where all ASEAN real-time payment switches are connected to each other, bypassing the need for any of the traditional FX layers and all of those layers to create impact for the people.
And so what innovation or, evolution in the financial sector happening in other parts of the world do you see that you would like to, to see coming in Singapore or in Asia Pacific overall?
Some of the countries have started to create infrastructure around risk and compliance for direct debit transactions and real-time payment transactions. Because one challenge for real-time payment transaction is there is not the traditional chargeback governance system. The refund APIs, the subscription APIs are not as mature. So I would say one layer is how the application layer works. I would love to see an equivalent of Plaid for Southeast Asia, for example. There isn't one today. There's some companies trying and aspiring to get there, but I would love to see an equivalent of a Plaid for this. I would love to see ability to have banking as a service for transaction banking payments, which is pure payments related, at a much more regional scale. Today, if a fintech wants to do something like that, they have to go and find one partner per market. Nobody would give them on a regional scale. So when you want to do something at that scale, to have some fintechs coming together or banks coming together to give a regional access, because only then you can unlock the real economic potential of ASEAN. If we could give that level of economic superpower to our people, it would be life-changing.
One question we ask our guests: if you could extend an invite to 2 people, and this could be people in your WhatsApp group that you haven't asked a question to, or it could be people that you've seen that are doing kind of incredible things that you want to know more about. If you'd like us to extend an invite to 1 or 2 people,
somebody from Plaid to explain and share how that model worked, and would be somebody from NuBank. The reason being, they've built a very interesting banking franchise in Latin America with a similar economic profile and potential, similar level of interest rates and stuff. So those 2 companies I really respect for what they have built and would love to see if our people can learn and build something similar.
And then I'm going to push you for one from this market. And it could be your favorite company that you've seen doing amazing things, or just someone you want to hear more from.
So would be a person called Richard Ko from a company called MDAC, raised $125 million from Alibaba in 2015, 2016. Their product was when AliExpress lists their products globally, they dynamically control the price and give 24-hour price locks. So you're a Chinese merchant, you can put a price in Chinese currency and it will reflect into 30, 40 global currencies and it will dynamically change. The guy built it slowly. I don't know the current numbers, but one point of time they had the bragging rights of highest revenue per employee for any startup, not fintech, any startup in Southeast Asia. So huge respect for what he has built.
Fantastic.
All right. We've got 3 names. 3 different continents. All right.
You wanted a challenging one, right?
Yeah, definitely.
I think on that note, all that's left to say is thank you. Thank you very much. That was fantastic.
Yeah, thank you for coming. Thank you for sharing your experience. Probably, Rich and I would love to be added to your WhatsApp group. I'm sure we're going to learn tons. That's fantastic. Varun, thank you very much.
Thank you so much.
Thank you. Well, I'll keep it simple as usual.
Go on, you keep it simple.
Yeah,
Come on, it's about time we did some work.
Yeah. Don't get too excited because I made it up and you're going to have to do it. So. So that's it for Rich and I today. If you enjoyed the conversation, please subscribe. Follow us on all the social media channels we're in. And of course, you can find this episode on Spotify and YouTube and click on the little bell button to make sure you've got the next one. Thank you and see you in the next episode. Freestyle, no script.